Hope everyone's doing well. Had a good day. This is the Emini end of day review for Friday, July 26th, 2024. Just want to add yesterday's low and yesterday's high to this chart. And I'm also going to add the 5,500 big round number. If you listen to Al, you know that big round numbers are often magnets. And today was a good example of that with 5,500. So coming into the day, first of all, it's Friday, so we'll look at the weekly chart first. And we had this outside down bar last week, and then obviously this week we're getting follow through selling. Bad signal bar, but we tested it and then sold off even further. So I think overall the market, even though it's in this bull channel, it looks like it's converting into a trading range. We have nested 3 pushes up. So we have 3 big pushes up, 1, 2, 3. The third push subdivided into 3 smaller pushes, and we could see on the daily chart in here there were also 3 pushes. So this was becoming climactic, consecutive buy climaxes for the bulls, outside down. Now the first target, the very first target, was the minor third push. So 1, 2, 3. The bottom of that buy climax, this was already reached here. I think the next target will be here or here, and eventually here. I think we're going to get to 5,000. But that doesn't mean we're getting there next week. It could take some time. And I also think that if we rally to a new all-time high, there's sellers above. This week was a bad high 1 signal bar, following an outside down bar. Again, consecutive buy climaxes. This is a resistance area. So I think if we get above this week's high, it's more likely there are sellers above. And then coming into today on the daily chart, two legs down, strong breakout, and tight enough that the first reversal up will likely fail. We had this trend bar on the daily chart, the trend day on the 24th, which was Wednesday. And then we had follow through selling, but we know that if we look at Thursday, it was a trading range day, big up, big down. So I thought the expectation coming into today was more sideways. We probably would not reverse and get a strong bull trend day, probably will not sell off and get a strong bear trend day. And then just one more thing I thought was interesting coming into the day, that was the Globex chart. So if we look at the extended hours, I like to look at the 15-minute. Here's the open of the day. So we're coming into the open. Here's the information we have. Here's yesterday, big up, big down. And then look at this. Through here, we have a bull channel. It's a bull trend, but the context is bad. You look to the left, big up, big down. It's overall in the middle of a trading range. However, you might notice we have open gaps. So here's a swing point, broke above it, did not close. Swing point broke above, did not close it. Same with here. So we have open gaps in the Globex session. The bulls have a trend with open gaps. That's a sign of strength. And then coming into the day, we have an expanding triangle. 3 pushes up, 2 or 3 pushes down. The market is expanding. So 3 pushes up, 2, maybe getting 3 pushes down. The market's in breakout mode. Now I thought breakout direction might slightly favor the bulls based on what we have here. coming into the day. Maybe we test somewhere high in yesterday's range. But again, I thought if this is yesterday's high, we're expecting sellers above. And if we get below the low, probably buyers below. Also, just one more stat. There's a 90% chance that we break out of either the Globex high or the Globex low during the day session. So here's the high. Down here would be the low. And just simply looking at this, the distance from the current price to the high and the current price to the low, it's more likely we're going to break out of the high. It's just closer. We have a bull channel. We're testing a bull trend line. It just makes sense that we're probably going to get above here before down here. So that was something to note as well. And just so we remember, the high of the Globex session was 54.92 3/4. So I'm going to have a lot of lines today. I'm going to add just one more, but I want to change these colors so we can kind of color code and keep them straight. So we'll make the Globex high maybe orange. $5,500, big round number, we'll make that magenta. And then the open of the day. Because I'm expecting a trading range day today, I thought the open of the day would be important as well. We'll make that green. So with that, coming into the day, we have a gap up and then a weak bull bar on bar 1. Because it closed above its midpoint, it's technically a buy reversal bar, but it's a bear body, so it's a weak stop order signal bar. Because of that, plus the context, big down, big up, there's probably sellers above bar 1 scaling in higher. If we get below bar 1, because there's a bigger tail below than the body, probably buyers below as well, plus you have the gap up and the moving average as support. Bar 2 was a strong bull trend bar, but the context is still not good. Remember, there's probably sellers above bar 1 scaling in higher. So if that's the case, you have bears who sold above 1. They're willing to scale in, maybe sell the close of 2, sell above 2. If we get to the close of bar 72, they will sell there as well. Because if you think about this rally, even though it's not ideal, there were reasons to not take this trade. Some unfortunate bull bought the close of bar 72, consecutive bull bars crossing the moving average, and they immediately got trapped. And so if we retest here, which we probably will, there's probably sellers waiting here as well. But for now, bar 2, it's a bull trend bar, but the context isn't great because it's following a weak signal bar, and it's big down, big up, we're high in this range. And then 3, we had a doji bar. Also, just one more thing I wanted to mention actually about bar 2 is that about 50% of the range of the bar overlaps bar 1. So there's a lot of overlap. The strongest breakouts have really little or no overlap at all. So then bar 3, we had a lot of overlap. Bar 3 sold off all the way down to the close of bar 1 and then rallied, but it's completely overlapping bar 2. And if you think about what happened, we had bears who sold above bar 1, got trapped with bar 2, they sold more higher, and then bar 3 let them out at their original entry. Bears took that opportunity to buy. Bulls thought bar 2 plus the gap up was strong enough for a second leg, so they're buying a pullback intra-bar. There's no technical pullback below a bar, but they bought maybe a 90% pullback of bar 2, and then we rallied into the close of 3. But 3 is a problem for the bulls. when you think about the context and what's happening here, we now have 2 legs up. We rallied on 2, pulled back, rallied on 3. We're still high in this range. I think the upside here is limited. Plus bar 3, lots of overlap. So there's overlap on the first 3 bars, which is characteristic of either a channel or, more likely here, a tight trading range. So probably more sellers above bar 3. 4, we didn't quite get above 3, so 4 is an inside bar, but it's a bear trend bar closing near its low. It's a strong looking bar that's good for the bears. However, the context is bad. When you ask yourself what the context is here, we have a tight trading range. It's a limit order market. So anything that's bullish, like bar 2, gets sold. Anything bearish, like bar 4, likely to get bought. We might go a little lower, but there's probably buyers below 4. It's also a micro channel since bar 79 yesterday. All the way up, we've had no pullback. So odds are there's buyers below the first pullback. And then bar 5 was actually similar to bar 3. So here, bull trend bar, but traders sold, big tail, and lots of overlap. Bear trend bar, but traders bought, big tail, lots of overlap. We did end up selling off into the close, but bar 5 is just like bar 3, but in the opposite direction. We had 2 legs up here, but it's nested within the tail. And then just like here, we sold off, rallied on 5, sold off again. That's 2 legs down. Now we're in the middle or bottom of a tight trading range. So probably more buyers below bar 5. And then 6, just like 4, didn't quite get above, we didn't get below. Traders bought the close of bar 5. 6, we have a trend bar, but it's in the middle of this tight trading range, so it's similar to bar 2. Probably sellers above. And again, this is a limit order market, so you have traders selling above bars, selling at the new high, selling up here, scaling in higher, and the same thing at the other side. Traders will buy below bars, buy below the swing point, buy at the new low, and they're scalping. 7, I think 7 today was a report bar, and I'm not sure, but the way it was behaving, it was moving quickly, and you can just tell, just looking at it, it sort of reminds you of an FOMC report bar, where it's really volatile, goes both ways, but that doesn't even really matter. All we know is that 7, we rallied and then pulled back. So bull breakout attempt, we did close above all the bars to the left, but 7 is bad context. It's 2 legs up, nested 2 legs here. We rallied, pulled back, rallied again. We might have even had 3 pushes. 1, 2, 3, and 7. Obviously the selling into the close isn't ideal. We tested the Globex high on bar 7. We broke out above it and then pulled back immediately. Plus over here we finally tested the close of bar 72. And we tested the high of bar 72 as well. Did not quite get there. There's probably sellers in the upper third of bar 7. If we rally, probably sellers. They might even be selling on the close of 7, betting it's 2 legs up in a tight trading range. We're high in the range. But 7's a bad stop order signal bar for the bears, so probably buyers below 7, scaling in lower. And then bar 8, we had a strong bear trend bar. Reminds me of bar 4, where a couple of legs up, or a couple of bars up for the bulls, bear bar, but tight trading range, bad context, so they bought it. Same thing here, a couple of legs up, big sell-off, but to the bottom of a tight trading range, so bad context. Plus all the bars today have been above the moving average. And so in this case, if bar 9 looks like bar 8, we get a trend bar closing down here, that would be better for the bears. Still not great because the context overall is big down, big up. The downside is probably limited, but for now the bears need at least one more bar. And whenever that's the case, especially in a context like this, tight trading range, bulls will take that buy just for that reason. The bears, they need one more bar. The bulls know that. They're probably not going to get it. There's support below the swing point, low in the tight trading range, and at the moving average. So just like bar 4, I suspect bar 8 will get bad follow through. And then 9, traders bought the close of 8. 9 rallied but then sold off into the close. So it's disappointing for the bulls. Think about what happened here. Any trader who was long on 7, maybe bought the close of 7, they're disappointed with bar 8. So if they get the chance to exit at break even, like on a rally, they'll take it, and that's what happened on bar 9. But 9, just like 7, was a bad stop order signal bar. So it's probably buyers below the bar, buyers on the close, and probably go a little bit higher. Bar 10 remained an inside bar, so now we have consecutive inside bars, which is breakout mode. Now, we already know the market's in breakout mode. It's a tight trading range. That's characteristic of breakout mode. So we know the market is very two-sided. We have a smaller trading range, the consecutive inside bars. So we have a contracting triangle, small trading range in here, within a bigger trading range, within an even bigger trading range. Yesterday's range, obviously big up, big down. This entire range could be the trading range. So down here could be the low, way up here could be the high. So we're opening with a really tight trading range in the middle. Just want to show one more thing. We're basically right in the middle of the range, and that's why we're going so sideways. If you look at these lines, if you can focus on just the gray lines from the top to here, this is the upper third of yesterday's range. This is the middle third. This is the lower third. So you can see we are within the middle third of this overall trading range day. So lots of sideways price action to be expected here coming into the day, and that's exactly what we're getting. So consecutive inside bars is breakout mode, but the context is bad because it's a tight trading range, and the inside bars are dojis. They're these weak trading range bars with big tails and small bodies, probably sellers above and buyers below. 11, we had a strong bull trend bar, but not really breaking out yet, testing the Globex high once again. But we're probably going at least a little bit higher. Bears, rather than selling right here, will probably just sell at the new high or above the bar 72 high. The problem the bulls have, this could be 3 legs, 1, 2, and then 3, and even here, 1, 2. So probably going at least a little bit higher, but the context is not good. 12, we did rally a little bit further, but we ended up selling off into the close, and we have 3 pushes up. So it's possible we have a wedge top in a tight trading range with bar 3, bar 7, and then 12, reversing down. 12 is a weak sell signal bar because it's a fairly big bar, so big risk, and it's a trading range bar. So you can call it a bear reversal bar or a sell reversal bar. It's basically a trading range bar, closing just below its open. Plus it's following bar 11, which is a fairly strong bar. The problem with 11, though, is that it's a strong bar, but it's a buy vacuum test of resistance. It's a good looking bar, but the context is a trading range. So big bars and trading ranges get the opposite. Good looking bear bar on bar 4, traders bought. Good looking bar on 8, traders bought. Good looking bar 11, but bad follow through. And so at this point, bulls failed to break out. 11 is a breakout bar, closed above the past 3 bars, but didn't break out above the tight trading range or this swing point. And then 12 rallied, but failed to close there as well. So the bulls have 3 attempts to the upside, but they're failing. So we're probably going to test a little bit lower, maybe the open of the day. But again, 12, not a high probability sell. And then 13 was a little bit of a surprise. Really strong bar. And if you watched the formation of this bar, I thought this was interesting. If you compare the formation of bar 8 to bar 13, bar 8, if you crack it open, maybe look at let me see what I can do. We'll look up to 1035 on the 100-second chart. And for whatever reason, that chart's not going to load for us, but we can look at the 1-minute chart. The reason I prefer the 100-second chart is because there are 300-second bars in a 5-minute bar. So we want to look up to 1035 right here. So here's bar 13. Here's the close of bar 13. I wanted to mention bar 8. You can see the market sold off, rallied, sold off, rallied, sold off. Kind of a parabolic wedge, or just a wedge in general. 3 pushes down, consecutive sell climaxes, as opposed to here after bar 12. Pretty consistent selling, although the bars did get smaller. But this was a stronger bar in terms of formation than bar 8 was. And I just thought that was interesting. So with bar 13, good looking bear bar, but it's just like bar 4 and bar 8, where now we have 3 legs down. You can call it an expanding triangle. 1, 2, 3, and then obviously 3 pushes up as well. So again, it's breakout mode. The expanding triangle is kind of continuing from the Globex session into the day session. So bar 13 is not an ideal bar to sell. If bar 13 gets follow through, that's a different story. If bar 14 looks like bar 8 or bar 13, then great. Although in this context, still not really great because you'd be selling fairly low in this range. But in any case, 13 is not very good because you're at the bottom of this tight trading range. So the first close below the moving average, and just like bar 4 and bar 8 had buyers on the close, that is my concern with bar 13. But I do think 13 was strong enough for a second leg down. And then 15 or 14, we had bad follow through. So traders did buy the close, but not a very disappointing bar. However, you might realize we have 3 pushes down, and bulls might buy on stops above 14, and bears might exit above 14 disappointed. You also have bears buying back shorts at the close of 13 if they have the chance. And then 15, we came close to the close of 13, but did not quite get there. So on some really small time frame chart, we had a bear breakout, a pullback, and then from the high of 14 to the low of 15, there was selling, and that's a second leg. Now it's really bare minimum. We didn't even test the low close of 13. But in this context, it's a third leg down, so that might be all the bears get. 15, we have a bear bar because it closed below its midpoint, but consecutive bull closes at the bottom of a tight trading range and expanding triangle. So 15 is a low one short, but it's a bad signal bar and bad context, so probably more buyers below 15, maybe even buyers on the close. 16, inside bar, it's a trading range bar. Buyers below, sellers above. This becomes the low one, but the context is still bad, and now you have 3 bars against you. The bears are hoping this is a bear breakout, a pullback, and then we get a second leg down. But I think more likely we're in a tight trading range, and the downside is limited. So if there is a breakout, especially below an inside bar like 16, breakouts below or above inside bars, the probability is reduced. It's a trading range bar. It's within the prior bar, and the bar itself is a trading range bar. There's buyers below and sellers above. So the downside and the upside is probably limited, probably going more sideways here. 17, we did go more sideways. We did attempt to break out below 16. We fell below it by a tick, but then reversed right up. So this might be becoming a little bit of an endless pullback for the bears. Bear breakout, we're pulling back. Bears are hoping for that second leg. But how disappointed are the bulls? Let's think about it from this perspective. If you're a bull and you bought below bar 12, betting it's a fairly big signal bar, you're probably not just going to sell off, even though we did. You could argue that was a low probability. You could buy below 12, buy more lower. You're probably going to make money because this clearly looks like a trading range, not a bear trend and not a bull trend. We also have far more bull closes today than bear closes. And so it looks like there's more buying pressure where more bars above the moving average, the gap up. So the context slightly favors the bulls here. And so if you bought below 12, the point I'm making is that gaps in trading ranges close. when you're in a trend, when the market's trending like over here, if you sold above 9, sold above 8, you're getting trapped all the way up. Sell here, you got trapped, no chance to get out until much later. But here, you could buy the high tick of 3, scale in lower, and make money. So if you buy up here, even though this happened, 13's it's an emotional bar. That's what Brad calls it. There are these breakout bars where, let's say you stepped away, you see bar 12, you step away from your computer for 5 minutes, you come back and the market's 20 points lower on 13. That's typically not how strong breakouts behave, especially when it's within the trading range. Now, if it was breaking out below a lot of bars way down here, that's different. But in this context, if you see a bar like 13, you know the gap it created from the bar 12 low will probably close. So I think we're probably going to go higher, but we may have to get a second leg down first. And then 18, a little bit of a surprise. I think I would consider bar 18 a bull breakout of a bear flag. Bear breakout, this is a bear flag, and we're breaking above it. So 18 is a little bit of a surprise. However, it was expected that we'd come up and test the bar 12 low. We didn't quite get there, probably going to go at least a little bit higher on the next few bars. And then 19, follow through. So bull breakout, follow through, but still within the tight trading range. So not ideal. And it's 2 legs up. So you will have some traders selling here. They're selling above 13, betting on breakout, deep pullback, second leg. And that's better than selling down here. There's also another thing. If you see a bar like 13, maybe 12 and 13, traders sell a 50% pullback, for example. And you can see that's exactly where 15 tested and sold off. But if you're a bear and you sold there and that's your entry bar, that's the following bar, that's the following bar, kind of disappointing. The market's really going sideways. So I think 18 was a give-up bar from the bears. It's a combination of that and bulls buying. So then we rallied on 18 and 19, breakout and follow through. Good for the bulls, but bad context. Better to buy a pullback. Probably buyers below 19, but the context isn't that great because you're at the high of a trading range. Went a little higher on 20, but sellers above 19 were high in the range. Possible head and shoulders, top, left shoulder, head, right shoulder. 20 is a bad sell signal bar. It's a trading range bar. And the rally from 14 to 20 might all be one leg on a higher time frame chart. And so this might be strong enough that a pullback will lead to a second leg. 21, we started to pull back, but buyers below 20. 21 becomes a high one signal bar at the top of the trading range, which is bad. It's a better bar to sell above, plus it closed with a bear body. So probably sellers above 21 going more sideways to down. And then 22, we just continued down, traders sold to close. And you see that all the time. Whenever there's a high one, for example, at the top of a trading range, traders would like to sell above the bar, but it's a little greedy, and you never really get the chance to. Kind of like buying below bar 5 or buying below 9. You don't get the chance. Traders buy the close instead. So here we sold the close, 22. Testing the moving average. Again, this might all be one breakout pullback. Maybe we're getting a 50% pullback. This is also interesting. I'm going to pull up a lower time frame chart once again. But first, let's look at the 50% pullback of the rally. And you can see that's where bar 22 is testing and bouncing. So big down, big up. So there's something interesting in here that I forgot to mention. On some small time frame, like we saw on the 1 minute chart, bar 12 down to 13 is a bear trend. Even though it's just 2 bars here, the market sold off for about 30 points. So what we had is a sell-off, a trend line break up to 15. We tried to get a retest of the lows, but this might have been a higher low from here. Higher low, major trend reversal, and then we got trend resumption up to the upside. The pattern's also nested, so bear trend, big trend line break, and then we're getting a retest. But since this was so disappointing for the bears, maybe all we get, let me put it this way. A bear sells the close of 13. So you're hoping for a breakout. You don't get it. Disappointing. More disappointment. More disappointment. Let's say you scale in at the breakout point, or you sell more below a bear bar, which is a bad example here. Let's say you sell below bar 20. So if you sold below bar 20, scaling into your short on the close of 13, I know there's a lot of lines. Sorry about that. Try to stay with me. We're looking for the red 50% level. If you sold to close 13, sold more but below bar 20, this is your break-even price. And bears might be so disappointed with this rally that that's what they take. So the downside might be limited. And then we rallied on 23. 23 is a high one at the top of the trading range. The signal bar is good. The context is bad. And I want to clean up this chart. I'll get rid of the Globex high. We already broke above it. We don't need this one. We don't need this. So high one. But the bears hoping there's sellers above. This breakout was strong enough, 3-bar micro channel, that there's sellers above 22. And then we form a second leg and come down here. And then 24, we did find sellers above, but 24 is a disappointing bar for the bears. There's buying into the close. Technically it's a bull bar. So now we're going sideways after a bull breakout. This might be a bull flag that leads to a second leg up. And bears who sold down here, they might be getting squeezed out. They're not really getting that chance to get out at break even. 25, we rallied above 24, triggered that stop order, which was bad. Sellers above, we have a reversal bar, 25. Now we have a nested head and shoulders pattern. Left shoulder, head, right shoulder, and then in here, left shoulder, head, right shoulder. So this is a sell setup below 25. But the context really isn't great after the bull breakout tight trading range, expecting a second leg up. You're selling just above the moving average, which has been support today. And overall, I thought this was interesting too. Bar 1 is the low of the day at this point. So technically, the bulls can argue we have a low, a higher low, high, higher high, higher high. The bulls will argue this is a bull channel. So we're getting higher lows and higher highs. So if you're selling here, the downside might be limited. Maybe the best you get is a scalp test of the open. But other bulls will see this as a high 2 setting up. We have a sell-off, one-legged, or the first leg down, high 1, second leg down. You could buy below 25 for a high 2. And that's what happened on 26. 26, good-looking bull bar, outside up. Context still not great, although it's probably worse for the bears. We're probably going at least a little bit higher after 26. The bulls looking for a second leg, 1, pull back, 2, maybe test of the bar 12 high. The bears still looking for a reversal down, but through here, the selling pressure is weak. The bears will argue. Maybe they'll get a third push up, 1, 2, 3. Bears will sell up here, double top, wedge, high in a trading range, and that's all logical, but the selling pressure in here is weak. We have open gaps. If a trader sold above 17, the gap did not close. We have an open gap here. 27 going a little bit higher. So now we have an outside bar breaking out with follow through, 27. But 27 is still within the range of 20, this tight trading range, and the overall trading range. So it's not clear that we're breaking out here yet. But we have consecutive bull bars closing on their highs. Probably go at least a little bit higher. 5,500 might be a magnet. The high of the day is a magnet. And if yesterday's range was a trading range, was the trading range, let's say, then this could be the top of the range. We could go all the way and test yesterday's high. At this point, it's still not very clear. It looks mostly sideways with a lot of overlapping bars. It's a tight trading range, limit order market. But I think the bulls have a slight advantage with the higher lows, higher highs. There's a lot more bull bars today than bear bars, and now we're getting open gaps. So we're getting a bull breakout here. There might be an open gap above this bear bar, 21 or 20 or 24. More follow through 28. Now we have a 3-bar micro channel, all of the bars closing on their highs. That's good for the bulls. Context is the problem. A couple of problems with buying 28. 3 pushes up, 15, 20, and then 28. Plus, it's a double top. We're testing near the high of bar 12, the big round number, 5,500. Last time we tested it, we rejected. But the momentum here might be too strong for bears to sell. They might wait to sell a little bit higher. Because it's a 3-bar micro channel with bull bars closing on their highs, we have a micro gap. The high of bar 26 does not overlap the low of bar 28. We're probably going to get at least a second leg from this. Also, another way to look at this, you could argue the market's in breakout mode. It's a contracting triangle. Here's the apex. We're getting a bull breakout of a triangle. So some traders will see this breakout as leg 1. It's resetting the market cycle. Market's in a tight trading range, breakout mode. We're getting the bull breakout. Of course, 50% of breakouts fail when we're talking about triangles, so this could easily fail and reverse down. So we're going to continue to see what we get and assess probabilities. And then we had a pause bar, 29. Does 29 look like a good sell setup? Probably not. $29 is a doji in a 4-bar bull micro channel. Even though the context might be bad, we might be high in a channel or trading range, there's probably buyers below 29 for a second leg up for the bulls. Plus there's the argument again that this could be a leg 1 reset. So some traders see 3 pushes up, the bears will argue it's a wedge, but the selling pressure is weak, so it's dangerous, and the signal bar is weak, so you need to go to entry bar if you're selling. And then of course what I just drew is that triangle, getting a bull breakout of a triangle, and this doesn't look like we are reversing, or at least not yet. So bull breakout, a pause. Bears who sold anywhere in here, let's say you sold below 25, you immediately got trapped further and further. You're going to look to exit on any pullback. And then that's what's happening on 30. I believe 30, the way I see it, 30 is a give up bar from the bears. So we have a bull breakout, a pause, and we're continuing to the upside. Bears are exiting their shorts. Bulls, maybe they're pressing, they're buying more, expecting a measured move up. I like to start with the bodies, the open of 26 to the close of 28. That brings us to here, which lines up with this swing point over here. That's a breakout point. The low of bar 41 yesterday is around this measured move target. At this point, the market might be in a bull channel. There was a tight trading range here, but from bar 14, this looks like a tight bull channel. And if that's the case, you only want to look to buy, because in a tight bull channel, the market isn't a breakout on a higher time frame. If you look at a 15-minute chart, 10-minute chart, some higher time frame, this is just a couple of trend bars, and it's going to be hard to argue selling against them. Where has a stop order bear made money? Maybe if you sold below 20, you made money, but other than that, bears are not making money. Even limit order bears are having a hard time making money. And so for that reason, we're probably always in long. When did we become always in long? It's never really clear in this context with the tight trading range. You could argue all the way back here because of context, it's always in long. And then when did it become always in short? I don't think it did. So 30, bull breakout bar, probably going higher, probably going to get to this measured move. We're breaking out of the high of the day. We've probably seen the low of the day. And then 31, follow through, so bull breakout and follow through. This breakout might get a measured move itself. We're breaking out of 5,500. And then more follow through, so we finally reached the first breakout's measured move. This could be extended using extremes, or you could even go for a measured move based on the second 3 bars. So the first 3 bars here, pause, and then a new breakout. That brings us close to the close of bar 44, where bulls got trapped, close to the high of yesterday. Strong enough breakout, we're probably going higher, and the bulls will get a second leg. But it's consecutive buy climaxes. We might pause here, pull back, bulls might take profits. And then 33 outside down. So mostly due to bulls taking profits. I think it's reasonable to exit longs below 33. However, 33 is an outside bar. We know it's an expanding triangle. It's a trading range bar. So probably better to buy below 33. In this context, there might have been an increased risk of selling off below. We've got a micro channel above the moving average in an overall trading range. So probably not a mistake to exit below 33. But you will have bulls buying there, betting this will get a second leg up. And then an inside bar, 34. So IOI pattern, breakout mode, probably buyers below, sellers above, but they won't come in until above 33. Then we went more sideways on 35 with an outside bar. It's a small outside bar. We'll see it as a bull flag, maybe a one-legged pullback, maybe two, micro double bottom, and then a bull bar they can buy above. But bulls who bought the close of 32, disappointed, they'll probably exit break even. The bears are hoping for a second reversal, but for now, this is too tight to be selling. 36 tested the close of 32, sold off. You can see bulls who bought here scaled in. They were disappointed. And that's what causes the the selling on the close of into the close of 36. I don't know what happened there, but I think we're good. So 36, what about selling below 36, double top with 33? I would not. I think it's too tight. I think the signal bar is bad. We need a trend line break first, and we don't have one. 37, another bar like 36, where we rallied but sold off into the close, but 37 is another bad stop order signal bar for the bears. Yes, it looks like bulls were disappointed, but bears are going to have a hard time making anything out of this. Micro double top, weak sell signal bar. There's probably buyers below. This reversal attempt is probably a continuation pattern. This breakout will still probably get a second leg up. So buyers below 37 on 38. High one buy, but not the best context. And these bars are mostly sideways, and all through 33. It's mostly sideways. We tested the high of 33, sold off. So we're in a trading range here. And we're getting high in the range of yesterday. So this might be an area where bulls, they see this high one, they might take profits above. But again, we still might get a second leg first. But I think it's becoming more dangerous to be long. There is still enough momentum and no trend line break that it's okay to be long. It's always in long. There's really not a reason to sell yet. 39 bull breakout. But we're converting into the channel phase. Here's a breakout, pullback. We're channeling up. And what we know about channels is that bulls take profits above bars and above swing points. 39 is testing somewhere in here, this tight trading range, where obviously there was a lot of resistance yesterday. So again, 39, good looking bull bar, but a little dangerous to be long. Might be a bar that bulls start to reduce their positions on. 40, we paused, probably due to bulls taking profits. Now we have 2, maybe 3 legs up. Here. 1, 2, 3. And then maybe 3 bigger legs. 1, 2, 3. Couple of ways to draw it and look at it. There's a resistance line there. The upside's becoming limited. We're probably going to start to go sideways and pull back soon. 40 is a bad stop order signal bar, probably sellers above. Not the best stop order sell signal bar, probably buyers below. 41 rallied, but now we're getting alternating bars, bull bar, bear bar, bull bar. Bulls will take profits up here. Again, we're coming close to yesterday's high, which was a lot of resistance. The market sold all the way off. So it's again over here, big up, big down, big up. This is a resistance area. Remember I drew yesterday's range into thirds? We are in the sell zone of yesterday. Here's the upper third. And so traders will sell up here and look to get back to the middle or lower third of this overall trading range. The momentum is still pretty good for the bulls. It's tight, there's open gaps, but the context is bad because you look to the left and you're within yesterday's range. So far today is an inside day. So it's not really breaking out of the prior day's bar. And so buying high in the range of yesterday can be dangerous. Probably better to wait to see a breakout and follow through above yesterday's high. 42 going a little higher, bad stop order signal bar. Micro channel since 38, probably buyers below for a second leg up. 43 triggered the sell, but reversed right up. But but 43 is a high one with bad context, 3 smaller pushes up, weak signal bar, high in the range, probably sellers above. And then again, that doesn't trigger, trader sold at close. Now we have a bear bar closing on its low, 44. Still a tight channel, not really a trend line break yet. Maybe we're testing the trend line on 44. It's a sell vacuum, 2 legs down, sold off on 43, pulled back, sold off on 44. So 44 might be a brief buy the close bar for a scalp, but bulls in this area probably happy to take profits. And 45, traders bought the close but scalped right out. We're going sideways for about 5 bars. Tight trading range, maybe it's a final flag, maybe probably sellers above, and there might be buyers below, but the context isn't very good. 46, a bull bar, but it might be a triangle, and again might be a final flag. So we might get a brief upside breakout that fails. We're in this upper third of this range, and the upside here might be limited. 3 pushes up, 1, 2, 3, 3 smaller pushes, 1, 2, 3, going sideways, breakout mode. Small inside bar, 47, probably sellers above, trading range bar and inside bar. Might be buyers below, but the context is bad. Traders might prefer to sell below that bar. 48, we're getting a breakout, but again, this might be a final flag, which means the last flag in the bull trend. So now we're getting a bull breakout, but we could easily reverse and convert into a trading range. So 48 going a little bit higher, but it's 2, maybe 3 legs up. We rallied on 45, pulled back, rallied on 46, paused, rallied on 48. So nested wedge there, nested wedge here, wedge here. Consecutive buy climaxes, high in a range. Bulls probably taking profits in this area. Bears might be building a position and scaling in higher. And then 49, bear surprise, really strong bear trend bar. 49 is an always in flip. You don't even need follow through when you consider the context and the strength of the bar. 49 is a bar where it doesn't matter where you bought. I don't care if you bought the low tick of the day, you bought the high tick of the day. 49 is a bar that you have to exit below. And when that's the case, you'll have always in bears beginning to sell below 49. And then we had breakout and follow through 49.50. So a strong breakout, but it could easily be a vacuum test of 5,500. You can see we came close to yesterday's high, but did not quite get there. This breakout makes me believe we're not going to get there. So 49.50, strong breakout for the bears. It's a leg 1 breakout. It resets the market cycle. Probably going to get a pullback and then a second leg down at a minimum. Traders looking for a test of the open, plus bar 1 is the low of the day, which in this context surprises me. With so much trading range price action, I would be surprised if bar 1 does remain the low of the day. But the bears still need a lot of follow through after this. This is a good start. It might be a little bit of a late midday reversal. But the odds are any pullback here will lead to a second leg down. Traders are trapped. Bulls who were long up here, obviously trapped here. And then bears who didn't sell below 48, bad stop order signal bar, didn't sell, they're trapped. They're looking for any pullback to get short. So you have bulls and bears looking to sell a pullback. That's the logic behind strong breakouts and leg 1 breakouts that lead to second legs. 51, we're pausing, bull, reversal bar, but obviously it's probably due to bears taking profits. No one wants to buy above 51. It's not a good reversal setup. You're following a strong leg 1 breakout, and you have a small bull reversal bar. It's probably sellers above, but we'll probably pull back a little deeper, maybe test the outside bar, low, this breakout point, maybe this breakout point. But I do think this was strong enough and big enough that, and then you see 51, we're probably not going to vacuum all the way up and get a deep pullback. 52, vacuumed up to some resistance level. It could be the moving averages. We tested the 60-minute EMA, came close to the 5-minute one. Maybe we came close to a 50% pullback but I suspect we won't go much deeper than that, considering the strength. So we came close, but didn't quite get there. There's a cluster of resistance here. And we know that traders are selling a pullback for a second leg down. But 52, it's a low one short, and low ones typically lead to deeper pullbacks and low twos and low threes. So probably buyers below 52. It's a weak signal bar and a fairly big bar. It is okay to sell below 52. Wide stop, you sell, it's always in short, and you can go for a swing. It's just not the most ideal entry, and you will have traders buying below 52, like bears who sold here, disappointed with the rally. They'll get out in this area and look to sell higher, and bulls know that, so they'll buy below 52 for a scalp. So we triggered the sell below 52, but reversed up. It's okay if you sold there. It's a low one, but you just have to be willing to sit through pullbacks and use a wide stop. So we're rallying on 53, but we know this is probably a minor reversal. You can call it a second reversal above 51 and then above 53. But these bars are smaller compared to this big breakout. We still haven't had a second leg, which we probably will. Probably sellers above 53, although maybe not directly above. It's a good looking bull bar. Probably test a little bit higher. 54, there were sellers above, but it's bad follow through for the bulls. So bulls hoping on a second reversal after that bear breakout, disappointed with their entry bar. 54, not a very good low 2 signal bar. You can sell below it, but again, it's similar to 52. Better to sell above, or maybe wait for a low 3. And then we rally to the moving average on 55, and 55 is a low 3, or excuse me, it's a low 2. Low 1 below 52, low 2 below 55, you could sell below. Trading range bar, but in this context, it's reasonable to sell below, expecting a second leg. And then we reversed up, similar to bar 53. But now 56 is a third push. So 1, 2, 3. Setting up a low 3 bear flag. Strong breakout, probably going to get a second leg. Pretty weak rally, consisting of about 6 bars, and covered less than half the distance that this bear breakout did. And then you'll probably get a low 3, sellers above 56. 57, there were sellers above, testing the moving average once again. Didn't quite get the 50% pullback. We're testing this breakout point, the bar 38 low. And 57 becomes a low 3 after a pretty strong bear breakout. Probably sellers below 57. Reasonable to take the short, and if you're long for any reason, you got to get out below 57. 58, strong entry bar, bear breakout, probably going lower, closing on its low. 59 pulled back, so disappointing for the bears, but still always in short. 59 might look like a double bottom, but it's more of a continuation pattern. We still haven't had a second leg down. Leg 1, this is not the second leg down. We're probably going to get a more symmetrical second leg. So reversal on 59, but probably more sellers above. 60 reversed down and closed on its low. You can see we're hovering around 5,500, but again, this is still strong enough. We're probably going to get a second leg down, but we might not go far below 5,500. Might be a magnet. 61 triggered the sell, reversed up again. Again, this looks like maybe a second reversal, double bottom, but it looks like a minor reversal and a bear flag. So bear breakout, triangle bear flag. Probably sellers above 61. And reversal patterns in this context are better to be considered continuation patterns. You can sell above the reversal setups and look for a second leg down, trading with the always in direction. 62 small entry bar, not ideal. Bulls hoping for a big breakout, they didn't get it. They might give up after seeing 62. And 63 is that give up bar, but 63 is disappointing for the bears. Why did 63 break out and then pull all the way back? Would have been better if 63 closed down here. So 63 is disappointing. We're still always in short, and 63 is a bad stop order. Bad to buy above it. There's sellers above, so it's okay to hold short. And then for possible targets for the bears, here's leg 1. You put that on the high of the pullback, and you can see leg 2 takes you right to the open of the day. So that could be a potential target. open of the day, leg 2 mission move. But again, 63 is a problem. Now we have 2 legs, 1, pullback, 2. I think we'll probably go at least a little bit lower. There's nothing to buy yet, and it's still always in short with magnets below. Think about day structure. It's not a bull trend day, it's a trading range day. So tight trading range on the open, bull breakout, but then a bear surprise, and then going lower, spike and channel. Inside bar 64, bad to buy, sellers above, probably buyers below. And then 65, falling below the inside bar, but there's probably buyers below. And if we fall below 63, bears who sold down there will be disappointed. There's going to be buyers below 63 as well. 66, follow through, but still within the range of 63. This is a big down, big up, and then we're testing the low. This could be a double bottom, and we could rally after 66, but we could fall below 63 first and find buyers below. Micro channel, so the first pullback likely to fail and lead to another leg down. 67 going lower, but we're at this support level where the bears who sold 63 on the low tick got trapped. So you have bears on 67. They'll be happy to buy back their shorts at this price, so we could easily bounce here. And then we went outside up 68. Outside bar, probably going at least a little bit higher, but it's a minor leg 1. So over here is a major leg 1. Strong consecutive bars, big breakout. Flips the always in. This bar doesn't flip the always in, but it's a real danger that we can pull back fairly deeply. If this is a spike in channel, bear trend, we could be at the bottom of the channel and we can come all the way up and test the trend line, which could be all the way up here. 69 follow through, bad low 1 below 69, consecutive bull bars, buyers below, probably going higher, but this is the first breakout of a micro channel, so we might get a small second leg down first. And then we did on 70, really minor, really small, but it was a breakout, pullback, and then from the high of 69 to the low of 70 was the second leg. So now we'll probably rally. Bears disappointed with this rally, buying back shorts, looking to sell higher. The bulls know this was strong enough for a second leg, so they'll buy below 69. So then we're rallying on 71, but we're still within the bear channel, testing 5,500 once again. So a couple of reasons, plus the moving average. There's some resistance in this area, so traders might look to sell 2 legs up in a bear channel. The upside might be limited. Bull breakout 72, but still 2 legs up. It's the first bar breaking above the channel. The bulls still need follow through. So if they need one more bar and it's always in short, bears will take that sell. And then 73 sold off. 73 was a vacuum test of support. Came right back down to the bottom of the channel. But think about it. If you're a bear and you shorted anywhere in here and then you're getting a retest, you're probably going to take that. This was a disappointing rally, enough to possibly convert the market into a trading range. So it could still be a bear channel with lower highs, lower lows. But if this was a major lower high, which is debatable, but you could argue that it is, then we got a higher high here. And you don't get higher highs in bear trends or bear channels. So here, the market could be in a trading range. Maybe we'll go a little bit lower. Bears might take a chance. But if this next bar hesitates, they'll get out, they'll buy back shorts, look to sell higher, and bulls can buy, betting it's 3 legs down, maybe even 4. And 73 is climactic. And then we paused and reversed up on 74. So bears disappointed, they'll buy above, they'll buy back shorts above 74. Bulls can buy above, betting the market's in a trading range. The low of 72 was a bad stop order signal bar. So you think about it, might be a tight enough channel, 2 legs up, that it's a breakout, but this is bad context to buy. But you can still argue, you can buy below 72 for a second leg. It's a weak stop order signal bar, and you get trapped on 73. So the bulls who bought 72 are disappointed, and so that becomes resistance. So if we come back there, this low of 72 will probably act as resistance. We vacuumed up to 75, testing 5,500 once again, but it could be a vacuum test of resistance in a trading range. So the upside might be limited, but we could get to a new high, maybe forming an expanding triangle. 76 follow through, but Bad context, you can call it a high 1 on a smaller time frame, but context is bad. It's a high 1 in a trading range, and you're high in the range, so probably sellers above. And then outside down 77. So you can see the market's getting very two-sided with big up, big down, lots of overlap. And this is looking more like a trading range than a bear channel. Probably going to go more sideways into the close. We still could reach the open, but we're probably not going to reach the bear spike measured move. And that's to be expected in trading range days. $77, similar to 73, probably buyers below. And then 78 reversed right back up. Expanding triangle, 3 legs down. If it started here, maybe 1, 2 pushes up, 3 or 4 legs down. But the upside's limited. 78's a big bull bar, but so is 75. And the context is bad. You're at the top of a trading range. There's probably sellers above. Inside bar, 79, sellers above, buyers below, probably going sideways into the close. 80, another bull bar, but still high in the range, probably sellers above. And then 81, we rallied a little bit, but ended up closing within the range of 80 and went sideways into the close there. So for always in today, it's kind of gradual in here. You have the gap up, so you can argue it's always in long from that, but it's big down, big up, so not really ideal. Better to buy low and sell high and scalp in here, but eventually you start getting a bull breakout with open gaps, weak selling pressure. You might start to consider that the market's always in long, and then you start getting this micro channel. First reversal down will probably fail, and then all the way up here, it's always in long, somewhere in here. And then at some point you start getting, remember, consecutive buy climaxes. A couple of ways to look at them. 1, 2, 3 over here. 1, 2, 3 in here. 1, 2, 3. Day structure, the high of yesterday being right here. This is a dangerous area to be long. If you get trapped on 49, you just get out below it. And 49 probably flips the always in. And if it doesn't, 50 certainly does. We're always in short. But then probably in here, this was enough to be big down, big up, big confusion. The market's in a trading range, no longer always in short. Better to buy low, sell high. So a couple legs up, you can argue it's always in short, but then here it can become always in long after just 1 bar, and it probably did. 3 bars up, but then you can argue it's always in short. Same thing, now it's always in long, and it just flips back and forth in a trading range like that. So always in's better for major trends. When you're in a trading range, you're getting minor reversals, minor legs. So I like to think of buy low, sell high, and scalp rather than always in trading. Stop orders today, nothing in here. Better to use limit orders. You can argue selling below 12 for a scalp, that's okay. And you can argue buying above 14. Low in the range, looking for the range is expanding triangle. The range is getting more broad. So stop orders begin to work here, but nothing in here. Bull breakout, 2-legged pullback, you could buy above 26, 27, 28. Now we're getting a breakout. You could buy for any reason, always in long. And then it becomes climactic, but still okay to be long. But then somewhere in here, the stop orders for the bulls, not really worth taking. I'm not sure I would buy above 38. And then nothing really for stop orders in here. But then for the bears, you could sell below 49, sell below 50, sell below 55, sell below 57. And then 1, 2, 3 pushes down, outside up. You could buy above 68 for a scalp, maybe a test of the moving average. And then you could buy above 74, and that's about it for stop orders. Limit order traders all through here. Sellers above bars, buyers below bars. Limit order trading in there. And then low 1 short below 16. Context is bad, you can buy below it. Strong enough breakout for a second leg, you can buy below 20, scale in lower for a second leg. 25 you can argue is a bad Stop order sell because of the context. You're selling just above the moving average, 2 legs down after a bull breakout. You can buy that as a high 2. Strong micro channel, buyers below the first bar here. And then here, 37 is a bad sell. You can buy below it. Micro channel up to here, you could buy below 42, but getting risky. And then I thought this was a final flag. You could sell above 47, taking a chance. Strong breakout, 51, probably going to fail. You can sell above. And then you can sell above any of these bars, betting it's a bear channel or a bear flag, and then we'll convert into a bear channel. So here, bad stop order, 59 and 61. You can sell above either of those bars, betting the reversal will fail. The bears will get a second leg. But after this big breakout and big pullback, you can buy below 63. 69 is a bad low 1, bad context, consecutive bull bars, you can buy below it. 72, not an ideal place to buy, but you can buy it some distance below, scaling lower, make money. And then 76 could be a high 1 at the top of a range, you can sell above it. 77, bear bar, similar to over here, buy the close, buy below. Low in a trading range, 3 pushes down. And that's about it for limit orders. Most days are some type of trading range day. And in this case, you can say we had a tight trading range on the open, and then a bull channel, which ended up getting a midday reversal, and then another trading range. So you can call it a bull trading range day. We had a lower trading range here, a rally, and then sort of an upper trading range here. It's not great, but you can see the high of this trading range sort of became support later in the day. And then for Monday, where do we go? We have this bar on the daily chart, which is a weak sell signal bar. Plus it's an inside bar, buyers below the bar, and probably sellers above. And it's strong enough down, even though it's 2 legs. This is all one breakout on a higher time frame. So we know that any pullback will lead to sellers above. We'll probably retest the close of Thursday, but that could take some time. As always, please feel free to leave questions in the comments for me and include timestamps for any question specific to this video. And with that, I hope everyone has a good night. Thanks for watching.